Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, May the 2nd, the year's 2022. Let's talk trading. Risk with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Now, risk is something that they usually talk about not every day, but for a while they were talking about it every day. But you've seen this screen if you've watched my videos, I'm sure. Risk management. Risk is the amount of money or whatever percent of your account you're willing to lose on any one particular trade. And that's how I like to define risk. And from risk, then you either decide where your stop loss is going to be, and if that's the way you do it, then you get your position size. Or if you know your stop loss is always going to be 10 pips, then you know what your position size is going to be and it doesn't change. So if your stop loss doesn't change, then your position size doesn't change. But if where your stop loss is on the chart gets moved around based on your method, then you're going to have to recalculate your position size to keep your risk the same. So how do you do it, Walmal?
Well, I define risk simply this: how much money am I willing to burn in the street today? And that's what risk is to me. And and like you said, you can define it in terms of pips, you can define it in terms of money. There are lots of ways you can go and define it, but I define it in terms of dollars. I'm willing to go and lose X dollars on any particular trade. And that's, for me, it's easy for me to do it that way. I'm just a simple guy. I like to go and do things as simple as possible. So if I'm willing to go and lose $100 on a trade, that's how much I'm going to risk. I'm going to risk $100, and that's where my stop loss is going to be. That's where everything I do from that point forward is going to be. And it's just that simple. Now, I happen to go and have two things I do in terms of that. I have how much I'm willing to lose on a particular trade, and it may get modified slightly. And that, in that sense, is let's say I'm up, $300 for the day. I may be willing to go and say, typically I'm willing to risk $100 on a trade, but because I'm up $300, and let's say my goal is to make $100 for a day, I'm willing to go and risk $200 on this trade. And that's not every trade, but that's just how I do things. I like to try to keep things as simple as possible. I don't like, having to go pull out a calculator, even if it's an on-screen calculator, to go and calculate, where my stop loss has to be, where this has to be, where that has to be. I just like saying, okay, this is where I'm going to be based on how many dollars I'm willing to lose, and it makes it very, very simple for me to do it.
Okay, let me stop you there because you said something that I'm sure is raising a question mark in some traders' head. You said, if your goal is $100 a day and you're up 300, well, right there, the first question is, why did you keep trading if you hit your goal?
And that's a good question. A lot of times I'll just keep on trading. If I know that I'm having a really good day, things are just clicking, I'll just continue trading. Other times, usually that's the only reason why I would continue trading. So, there are days, and I think, Hero, you can go and attest to this. There are days when you're in the market, everything just seems to just fall into place and click, and it almost seems like I'm taking candy from a baby. Not taking baby from candy, but taking candy from a baby. It just seems to flow that way, and it goes that way. Well, if that's the type of day I'm having, why not continue trading? Especially if it's early in the day still, and there's lots of time to still continue trading. There's more risk to it, but isn't that why we have stop losses, and isn't that why we have risk management? And as long as I can go and do that, because there are days where, hey, I can go, if I'm willing to go make sure I'm going to make goal, and I'm going to make goal, and I can't get past making goal, why not take the risk? Why not take on the additional risk? Because those are the type of days where you can go and really, add in some cash into your account. That's me. At this point in time in my career as a trader. Now, other folks maybe you're new into forex, and it's like, okay, I just want to get into a discipline, make the money, and maybe for them it's better that they don't do that. And I can tell you in the beginning that's what was better for me until I got into this, and then I would paper trade. Once I made my money, then at that point I'd paper trade so I could go and be able to recognize trades better and be able to recognize getting out better. But I wouldn't actually go and risk real money during that period of time because it was so important just to go and let's say have $100 in my account. So I think for every trade it's going to be a little bit different.
Yeah, but what I'm thinking is let's say you close your trade or during a session and you're up 110 bucks, and
Right.
then you put the trade on. Now you wind up, you give back 50, so now you're at 60. And so
Right. And
maybe,
that, and that,
go
yeah,
ahead.
and that can, yeah, if you bring up a great point there. So if I get out of my trade, and I'm up $110. Most times, not every time, but most times, I'm done. Okay, and or especially in the beginning when I was first learning how to trade, I would be done at that point in time. Yeah, and the reason why is because I don't have any room. What is my stop loss going to be? $10? Because of my secondary rule, I don't want to go below whatever my goal is. Where I have some freedom. Let's say I go and take a Walmal trade. Let's say I took a Walmal trade at the beginning of this hour or beginning of last hour. Okay, I went into the trade. It went up. I got 2 or 3 pips. Let's say that got me maybe $50. Okay, it came back down across to 60. Then it got another break. Across to 60. But this time I picked up let's say $200 or $300. Okay, well now at the close of that trade, I'm now sitting there with 250 or $350 in the bank. Now I can go on and Now I can go and risk what I've accumulated for the day. And that's the scenario that I'm talking about. If I just made $150 or $110 on that first trade, I'm done. That's the best way to look at it. Now, I'm going to give a little bit of a caveat here with this whole thing of going and risking your day's winnings, and that is that a lot of very seasoned traders who are a whole lot smarter than me basically go and say, don't do it. Look at that money that you've made, put it in a bag, close the screen, and walk off and be happy that you had a great day. And their rationale for saying that, I think is actually a pretty good rationale. And this is something that everybody's got to go and play in their own head to see where they would stand. And their rationale is, I just turned a really great day into a pretty crappy day. Let's say you go and you're up $350, and now you're walking away because you did follow your rules, but you are now walking away with only making gold of $100. Still a good day because you made gold. But you could have walked away with 350, and that could play some head games on you.
Yeah, that's why I said I'm pretty sure a couple of traders out there are probably thinking, well, wait a minute, you hit gold. Why are you keep trading? But you mentioned something else um, that a trader could probably do is if you're up 300 and you quit trading real money, you switch over and you just trade demo just to sharpen your skills, just to see. You might go, well, what
Absolutely.
would have happened? And then, but the only problem is when you're playing with demo money, you really don't have any skin in the game. So maybe instead of risking a lot or two lots per trade, or whether it's a full lot or a mini lot, maybe you go down and you risk to a dime a pip, where if you lose 100 pips, that's only
So
10 bucks.
right, yeah, and you can when you go and risk, when you go and do it that way, there's nothing wrong with doing it that way, and there's advantage to doing that because you do have some skin in the game at that point in time. Um, my problem with doing that is that because of my method of trading, I don't look at it in terms of pips. I look at everything in terms of dollars. So that skews my brain in the way I think. And so, when I get into a trade, let's say I'm going into a trade and let's say my number is I want to make $100 on a trade. Okay, let's just hypothetically say I want to make $100 on a trade, and I'm willing to stick to that rationale as opposed to looking at it in terms of pips. Well, the problem with that is that if I'm only trading, let's say a tenth of what I normally would trade, well, to make $100, I got to go and move an awful big distance, which throws off my entire game.
Right.
That's why I don't do that, personally. So it comes down to, does your method allow you to do it? If your method allows you to do what you're saying, Tiro, then yeah, that's probably the better way of doing it. But if your method, because my method of entry and exit doesn't work that way, that wouldn't work for me personally. But like I said, everybody's trading plan is different.
Yeah, that's for sure.
And the thing is, you got to figure out what works for you. In the very beginning, going back, I can't believe I'm saying this, but going back into the old days of almost 20 years ago, 15 years ago when I first started trading, the reality was I did everything with, pips and points and so on and so forth, and it worked. There's no question about it. But I found that when I went and started looking at things, and this was only a revelation of a couple of years ago, and of looking at everything in terms of dollars, for me, that was that was a complete turnaround for me. That was probably one of the biggest things that caused me to go and increase my trading ability, and that's that's important. You have to recognize who you are as a trader. Other people would have done what I did, and it could have been a colossal failure. Because like I said, when you're seeing real dollars going out of your account, some people just they can't handle that, and it's easier for them to see pips going out of their account. But for me, I want to see dollars going out of my account, so I'm able to control my loss. It's sort of like, I've used this example before, and I'll use it again. It's sort of like you go to Las Vegas, you go to Atlantic City, right? You go down there and you say you put $1,000 in your pocket, and you say, when this $1,000 is gone, I'm gone. I'll go to the free buffet or whatever else is there, and that's how I look at things. I just look at it that way, because that way I'm not going in and extending credit. I'm not going out there and taking a second mortgage on the house so I can continue to play. That's foolishness as far as I'm concerned.
Right. Yeah, because it's funny you mentioned that. It made me think of something. Whenever I go to Vegas or a casino, I just have my philosophy is, if you want to win big, you got to bet big. And so let's just say I'm willing to lose um, $200. I'm going to have four $50 bets, and if I lose four in a row, I'm out. And I'll play till maybe I make 100, and then I'm out. And usually, the because of that, if I get two wins in a row, I'm done. If I can beat, and it makes it real simple. And people, I've actually gone to um, Atlantic City, and I was done in like 5 minutes. And they're
Right.
like, because I remember I went up with a bunch of coworkers one time, and they said, "What's wrong?" I go, "Well, I'm done." They go, "What do you mean you're done?" I go, "I already won a couple $100. I'm done for the day. I'm just going to enjoy, walk the boardwalk, eat popcorn, and and so that's kind of way in trading. If you're playing around with, like you said, with small amounts, then you're gonna, and but you want to win a big amount, you're gonna be at that table a lot longer. In this case, you're gonna be at that trading screen a lot longer, and it's real easy to throw your game off. But
Yeah, I
the
mean,
fastest 15 minutes in trading is up. But we're going to be revisiting risk, I guess, all of May. So we'll have more stories to tell. So let me know in the comments what you guys are doing, and girls and non-binaries are doing um, with your risk management. Because when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.